In my last video, someone asked if I could take a company and break it down step by step using real financial data. So today we are analyzing UBA, United Bank for Africa PLC. This is not about telling you what to buy, it's about understanding how to think. UBA is a Pan-African bank operating in over 20 countries, giving it diversified revenue. When carrying out fundamental analysis for a bank, key drivers are deposits, loans, interest income, and risk management. If you look at the income statement for UBA, let's head over to UBA here. All right, straight income statement. Now you will see that from 2015 to 2024, the bank's interest income has grown from 229 billion to about 2.3 trillion. Okay, I must also quickly mention the fact that we don't have the 2025 full year report yet, but we can make reference to the quarterly reports is as good and close to what you get in the full year report. So to give you a guidance as to what the full year report would look like. Okay, so looking at where we should quickly pay attention to on the income statement for banks, especially what you want to look out for is the net interest income, and because the way the income for banks is recorded is different from the way a traditional company is recorded. Now, so you are focusing on two components of bank's income, which is interest income as well as non-interest income. Interest income are for interest for especially from loans, while non-interest income are from bank transactions like commissions, like fees, like ATM charges, transfer charges. That is where the income comes from. So if you look at the income statement quickly, you will notice that yes, the interest income has been growing. Interest expense is also growing. Interest expense is the interest banks also pay on some deposits, like fixed deposits. All right. So if you look at the net, you see that it has grown by 116% as at 2024 full year report. If you check it on a quarterly basis quickly, you would see that it has not been growing that much. If you look at the net interest income, but that has been stable, but there was a bit of a slowdown from the last quarter, that is from the second quarter to the third quarter, which is what you are seeing that I've highlighted here. There's been a sort of decline, which declined really around by 5%. So it is something we'll need to look out for. Then the next thing you want to also look out for on the annual basis is the provision for loans. So this is any loss that might occur from any loan that the bank has given out. So it is expected that they should make provisions for that particular loan. So that reduces the amount of income they have to play with. So the more that number grows, the lower the amount of income the bank can report. So if you look at the provisions for loan losses, you can see that it also grew slightly by 50%, but it's a significant slowdown from where it was coming from in 2023. Now it grew just by 50% compared to what it did in 2023, where it grew by 332%. So if you look at it on a quarterly basis, you'll see that that figure also reduced by 9%, so which is a positive one. Let's look at the net income. You can see that that grew by 39%. It was kind of not stable throughout 2025. There were lots of swings, but later became positive by the third quarter of 2025. So that grew by 39.58%. The income was a little bit volatile due to some other activities. So, but where the stabilizing activity came from, you see maybe income from other activities other than just the banking activities, right? So if we look at the full year report, you see earnings before tax, including unusual items, right? Other activities that are not related to banking. You can see that it just grew slightly by 6% by 2024. And if we look at it on a quarterly basis, you see that net income growth, okay, that grew by, yes, that was a positive figure and it stayed very stable. Like I said, when you're looking at the income statement for a bank, pay attention to the net interest income, you pay attention to the provisioning for loans, as well as what the net income is. Other areas you can look at also is how the dividend has been growing. If you come to the annual side, you can see that the dividend per share, although it has grown by 78% from 2023 to 2024, but you won't have that figure for 2025 until the full year report is received. All right, the next thing is to look at the balance sheet. I'm on the balance sheet now. So one of the things you first notice and you pay attention to is the growth in the bank's total assets. From 2015 to 2024, you notice that the bank's asset has grown from about 2.7 trillion to about 30 trillion. If you also notice that it grew between 2023 and 2024, it grew by 46.82%, but sort of slowed down between 2023 and 2024. If we want to drill down on a quarterly basis, you will notice that that declined slightly by 2.34%. It started the year by a growth of about 4.58%. Then by the second quarter, just grew by 4.91%, but this now declined by 2.34%. So looking at the total asset growth, you see stable and nothing happening there significantly. But another area you want to pay attention to significantly is the cash and cash equivalents growth. So the amount of cash the bank, but you will notice that there's a lot of swings in the cash flow of this bank. When we are looking at the cash flow statement, we'll be able to see what is responsible for that and why it is growing. But it doesn't mean the bank is insolvent or does not have cash. It just means that you need to look deeper to understand how cash is moving in the business. And remember that it's not just for the bank to generate revenue, as we've seen that yes, the bank is really generating revenues from interest and loans and other area, but you want to be sure how they are converting that revenue into actual cash. You also see their total investment that has also been growing. That has grown from about 6.2 trillion to about 15 trillion. And you see what the components that are responsible for that is investment in securities, whether it's treasury bills, government bonds, different type of investment securities. That's a major part of what is responsible for that. So from 5.8 trillion to about 15.3 trillion, right? And for trading asset securities, not as much, about 399 billion, to about that has declined to about 220 billion. All right, so let's look at how the loans of the bank is also growing. You can see loans, the net loans have grown from about 4.6 trillion. So the net loan is just after making allowances for bad loans, right? You can see that has gone from 4.6 trillion to about 7.4 trillion. Then the gross loan is responsible for that. Then the allowance for loan losses, you can see that that's grew from about 267 billion to about 364 billion, which is also not good. It is something the central bank is always frowning at and will expect banks to control significantly and bring that number down. The next thing you want to look at is where the deposits are. Let's see how the deposits have been growing. If we scroll down here, so the total deposits as at the time of this report for 2024, you see that it has grown from about 12 trillion to about 26 trillion. And you also see the major component of that investment. So most of it are non-interest bearing deposits. Wow, that's a huge number. Non-interest bearing deposits from here has grown from 6 trillion to about 14 trillion. Okay. The next aspect you want to pay attention to for banks is how they're managing the debts and if that is also either growing or reducing, because the more debt the bank has, it becomes more difficult to provide more value to shareholders in terms of dividend. If you look at here from 404 billion, that's grown to about 538 billion. That for me, I think, this is even on a quarterly basis, right? But if you look at on an annual basis, maybe we'll be able to get a clearer picture. The total liabilities has grown. See the total deposit on a year-on-year basis, apart from the quarterly basis, The total deposits, yes, 24 trillion. And major part of what is responsible for that, for interest-bearing deposits, you can see that has grown from 1.3 trillion to about 10 trillion. And for non-interest bearing deposits, that has grown from 800 billion to about 14 trillion. So that just shows you the composition of the deposits that the banks are holding. All right. The next thing is to see equity. Total equity from about 332 billion to about 3.4 trillion, which is a very good sign. Also, it's showing capital strength for this bank. So the next thing we want to look at is the cash flow statement. Now, this is where the story really gets very interesting when we look at the cash flow statement of this bank. So we'll head over to the cash flow. If you look at on the annual basis, the cash flow from things like the cash from operations, you can see that it has been very volatile. You have positive, you have negative, positive, positive, negative, negative. Then before we now have the swing back to the positive. So it's one thing to generate profit as we've seen in the income statement, but if it's not translating into cash, it definitely might be sending some sort of signal. However, if you look at the way UBA carries out its operations, you don't quickly run to conclusion and say, oh, the bank is having cash problems. What you need to look out for is the nature and the movement of this cash. So if you see, you'll notice that they may not be getting from their operations, cash has been a little bit volatile or not growing as fast as should grow. Some may say this is a bit weak, right? Because it started positive from 2015. By the time you moved over to 2024, you will notice that by 2023, it was significantly negative by 4 trillion, then but now dropped by half to 2.3 trillion. But experts will definitely say this is maybe some balance sheet movements, some FX or some asset revaluation or increase in some loan movements or investment movement. If you look at from the investing activities, of course, that is also negative, and you had a major outflow into investing activities up to 5 trillion. I think it's slightly typical of banks to have this type of volatile cash flow because you won't expect that cash will be sitting there idle, unlike a regular company. But if you look at what we are seeing on a quarterly basis between the first quarter of 2025 to the third quarter, you will notice that it's still confirming the issue of the cash being volatile in operations. You can see significant dip by 1000%, then all of a sudden it swung back to about 323%. Then from investing activities, you can see that there was some sort of sudden spike in cash from investing activities that grew up to 85%. Now, the balancing aspect of it is definitely coming from the financing aspect of it. That is how the bank is raising debt or raising capital from financing. They are also issuing things like debt, either issuing things like equity just to raise capital to manage their cash flow. You can see that grew from positive aspect from 2.8 trillion and went into negative about 2.8 trillion also, and declined significantly by 438%. Cash flow swings between large negatives and positives is something that we need to pay attention to, as well as if you look at the investing cash flow is consistently negative, showing aggressive capital deployment. So actually putting that capital to show good use. Also notice that the various areas where this is coming from, right? Now, if you look at the net changes in cash, you can see that it started positive, then net change in cash ended up being positive again. We're on the quarterly. What you just notice is that up and down swing, some sort of a yo-yo effect, right? If you look at what you see on the annual basis, it looks much more stable and ended up with close to about 709 billion net cash. Yes, net change in cash. It's about 700 billion. You can see not just to pay attention to the revenue generating activities, but how cash is also. We should also look at the whole analysis and the backdrop of the current recapitalization. And I believe UB has already met that recapitalization. That also shows the long-term viability of the business. Now, everything that we're also looking at in the financial statement for 2015 till now really shows long-term trend of this company and the long-term outlook for this bank. However, there are some strengths we can look at and some negatives also. So those are the things you now look at and balance out. So on the strong part of it, you can see that there's strong revenue and profit growth. There's large balance sheet expansion. There's strong deposit base. Some of the risk to consider is definitely the rising provisions. That is the amount of money the bank is setting aside for bad loans. The volatile cash flow is also something we want to be mindful of when investing in this kind of company. You also need to be mindful of the regulatory pressure. Of course, the banking sector is a highly regulated environment. All right. So, but overall, it's not just about growth, but how the growth is really being achieved and where this growth is coming from is one of the things we want to pay attention to. I hope you found this helpful. If you have not subscribed, please hit the subscribe button and the notification bell so that you're notified every time a new video is posted. Don't forget to give us a thumbs up. Thank you.